MainStreetEconomy.com, a place where we, the people, can share, learn, and motivate others to face reality and realistic solutions.
Well, 2007 ending with some grim news on the home front. New home sales plunging to their lowest level in 12 years. But what about 2008? Is the worst yet to come, or are things going to finally get a little better? Well, John Rutledge says he knows. So, John, better or worse?
I think that we're going to see a bottom next year in the housing market, and there'll be an opportunity there. Now, I'd like our viewers to not buy yet unless you get the Lorena Bobbitt discount of at least half off. But the mortgage market is going to be coming back next year.
Ew.
You know, the thing that caused this problem is not payment issues, it's the death of the bond market that handles mortgage-backed securities. It's a lot like an electricity blackout. Blackouts end abruptly just like they start. When that market comes back to life next year, not only are housing prices going to firm up, but you're going to also see big opportunities in the stock market in financial-related stocks.
So, Quentin, big opportunities in 2008 on housing?
Well, I think history might be on John's side, and as much as 12 more months of downturn would be very, very rare an event. But this is a monster that feeds on itself. The scary thing in Friday's number was that the new homes declines were also in the Midwest, which wasn't a speculative area. That is to say that it's spreading beyond the subprime speculative stuff and into the broader market. That reflects back into the banking sector. That's going to reflect back into the banking woes. That's going to speed into a potential recession, some kind of economic downturn. It's hard to see housing prices recovering while we're in the middle of an economic reworking.
Ouch. Better or worse, Evelyn?
I think it's going to be better at the end of 2008. Look, when we see ugly numbers like these, it's easy to play the Chicken Little card. But really, when it comes down to it, the government is still strong. The economy is still strong. You know, people are still spending, and people still have their jobs. So eventually, people are going to go back on the market. Now, in terms of the inventory glut, yes, that's a problem right now. But home builders are cutting back. They're not manufacturing new homes. So eventually, the glut will tighten, and demand will pick up.
So things are going to even out.
No.
Elizabeth, people will always need houses,
yes,
right?
You're absolutely right. But, you know, you talk to Mortgage Bankers Association, the guys at Moody's, they say 2009. Look, through the 6 years through 2006, house prices rose 74% in this country.
Wow.
You got to watch median income only rose 15%. By the way, those numbers are not adjusted for inflation. And by the way, we're going to see ARM resets of the order of $271 billion going on now through the second quarter.
By the way, do you think it has to drop to that 74
I think it will have to
down?
rationalize, come back to earth, and that will happen, I think, in 2009.
What about that, John? The fact that we've just grown so much, 74% in 3 years, there's no way that we could possibly get better than that.
The big reason prices increased so much is because interest rates went to a lower level, and you've essentially priced the housing stock at its current rents at a higher number, just like happened in the stock market. I don't think anyone believes rents are going to fall, and I think probably they're going to rise, which means unless you come with a big interest rate increase story, not going to happen. But I'll let you in on a little tip. If you want to see the best indicator of household liquidity, of whether they can afford to do things, look at the used car price index. There's a thing called the Manheim Index that has been dropping for the last few months. Households do have a liquidity issue, but I think that that's something that will have a hard time lasting for more than the next year.
All right, Victoria, you got a lot of San Francisco real estate behind you right now. What do you think?
And prices are still very high here. Look, what happened was much more fundamental than just loans being given with very lax terms. Housing prices went way out of whack. You saw in the last 6 years, housing prices went up 74%, while wages, income only rose 15%. It's going to take a long time to work that out. I'm not optimistic about housing going into
Quentin, go ahead,
year.
quickly.
Well, you're saying that, you know, a retrace right back to the zero, that would be like prices falling 40%. But incomes do go up, and people hold on to their houses.
40%,
I think 20 or 30 would be a lot.
What about 20 or 30, Vicki?
That would be a lot. Historically, that would be really unprecedented, but we haven't seen really severe drops yet, and this is creeping into other areas, like cars and credit card debt.
Last word from Victoria. Thanks very much.